When we talk about Oklo, the first thing that grabs attention is its promise, a small, clean nuclear reactor that could revolutionize energy as we know it. And let me be honest with you, it sounds incredible. As investors, our brains light up when we hear words like innovation and future energy. But here's the thing. Sometimes the hype can blind us. When everyone's talking about the potential upside, investment, it's easy to overlook the risks that are lurking just beneath the surface. That's exactly what I want to focus on today, the hidden risk no one tells you about Oklo. First off, let's talk about the allure of innovation. We live in a world that worships the next big thing, and Oklo fits that mold perfectly. But investing in innovation isn't the same as investing in proven businesses. The technology is exciting, but excitement alone doesn't pay the bills. When you're evaluating a stock like Oklo, it's crucial to separate the cool factor from the actual financial viability. Investors who chase only the vision often end up burned when the reality of execution sets in. Now, let's move to something that rarely makes the headlines: regulatory hurdles. Energy, especially nuclear energy, is one of the most regulated sectors in the world. Licensing, safety inspections, investment, environmental approvals, they all take time and money. These aren't minor bumps in the road. Delays can last years and cost millions. So even if Oklo's technology is flawless, government bureaucracy could slow down adoption and affect projected profits. This is not a risk you want to ignore just because the headlines are all about breakthroughs. Next up is execution risk. Building a small modular reactor isn't like launching a new app or selling another gadget. We're talking about cutting-edge engineering, complex supply chains, and high-stakes safety requirements. Every step in the process is loaded with potential setbacks. One unexpected technical issue can blow timelines and budgets out of proportion. Investors need to understand that even the most brilliant ideas can stumble in execution, and Oklo is no exception. Finally, let's consider market adoption. Even if everything goes according to plan, technology works, approvals come through, and reactors are built, there's no guarantee the market will embrace it immediately. Utilities and governments tend to move slowly. They may wait and watch, skeptical of new players in a traditionally conservative industry. This means that the revenue and growth you're expecting could take much longer to materialize than you anticipate. So, when you look at Oklo, it's easy to get swept up in the promise of clean, revolutionary energy. But as investors, our job is to focus not just on the upside, but also on the risks that are hiding in plain sight. Innovation is exciting, but regulatory hurdles, execution challenges, and slow market adoption are very real. The stock may seem like a rocket, but these hidden risks could just as easily slow its flight. Before you make any moves, take a moment to ask yourself, am I buying into potential, or am I buying into hype? Understanding this difference is what separates a smart investor from someone who gets caught off guard. When we talk about Oklo, the first thing that grabs everyone's attention is the innovation. A small, clean nuclear reactor that could change the energy game. That's the kind of story that gets investors excited, and I get it. Who doesn't want to be part of the next big breakthrough, the company that's going to disrupt an entire industry? But here's where I need to be brutally honest with you. Just because something is innovative doesn't automatically mean it's a safe investment. We often let the hype cloud our judgment, especially when the story sounds this good. Everyone loves a visionary company, but as investors, we need to step back and separate the excitement from the fundamentals. Innovation has a way of making us overlook reality. We see the headlines, we see the press releases, we see other investors pouring money in, and suddenly we feel like we can't afford to miss out. But what's missing from all of that is the practical side. Can this technology actually be scaled? Can it be implemented efficiently, safely, investment, and profitably? There's a difference between a brilliant concept on paper and something that works reliably in the real world. Too often, people get swept up in potential without thinking critically about execution. And in a sector like nuclear energy, the stakes are incredibly high. Mistakes aren't just costly, they can be catastrophic. One of the hidden challenges is the timeline. Breakthroughs sound amazing in press releases, but they don't always translate to immediate revenue. Oklo may have a revolutionary idea, but every step from concept to operation is filled with obstacles. You're dealing with regulatory approvals, technical testing, safety compliance, investment, and massive infrastructure. That's not something that happens overnight. And investors need to understand that the timeline for results may be much longer than the marketing hype suggests. Meanwhile, stock prices can fluctuate wildly based on perception rather than actual progress, which makes it easy to get caught in the emotions of the market. Another aspect to consider is how human nature reacts to innovation. We love stories of the underdog or the next tech miracle. We celebrate disruption and visionaries, but rarely do we pause to analyze the practical realities. Investing based on excitement is risky because it assumes everything will go perfectly. In reality, even the best ideas can face delays, cost overruns, or technical challenges that nobody anticipated. And in high-stakes industries like energy, these challenges aren't minor. They can define whether a company succeeds or fails. So when you're looking at Oklo, it's essential to appreciate the technology for what it is, but also to understand that the innovation itself isn't a guarantee of financial success. The story is compelling, the vision is powerful, investment. But as investors, we need to focus on what could go wrong just as much as what could go right. Excitement is a signal, not a plan, and being aware of that distinction can protect you from making a decision you might regret down the line. Now, let's talk about something that doesn't get nearly enough attention when people discuss Oklo, and that's the regulatory hurdles. When you hear about a company creating a groundbreaking nuclear reactor, it's easy to get caught up in the excitement and ignore the reality of government oversight. But the truth is, energy is one of the most heavily regulated sectors in the world, and nuclear energy sits at the very top of that list. Every decision, every design change, every operational plan has to pass through layers of regulation. And these approvals are not just formalities, they're detailed, time-consuming, and incredibly expensive. Think about what that means for investors. Even if Oklo's technology is perfect on paper, it can take years just to get the necessary licenses and safety approvals. Delays in regulatory approvals are normal in this industry, not exceptions. A project timeline that looks feasible today can stretch into multiple years, pushing back revenue and growth expectations. For an investor, that translates into patience and resilience because the market can react unpredictably to delays, even minor ones. Stock prices might move based on perception, rumors, or expectations rather than actual progress, and that volatility is something you need to account for. Then there's the cost factor. Investment. Meeting regulatory standards isn't just about passing inspections. It often involves redesigns, additional safety protocols, compliance consultants, and ongoing reporting. Every adjustment or requirement can add millions to the bottom line. And that's before you even think about the operational costs once the reactor is built. Many investors underestimate how much capital and time are absorbed by regulatory compliance, and that's where the hidden risk comes in. A company could have a brilliant technology, but if it can't navigate the regulatory landscape efficiently, it's going to struggle financially, no matter how innovative it is. Investment. It's also worth noting that regulatory bodies are cautious by design. They're not going to rush approvals just to satisfy investors or shareholders. Their job is safety and public trust, and rightly so. That caution means companies like Oklo must not only prove their technology works, but also demonstrate that it meets every conceivable standard of safety and reliability. That's a high bar. And missing it even slightly can lead to setbacks that ripple through timelines and budgets. So as exciting as Oklo's story is, investors need to factor in the regulatory reality. Innovation may grab headlines, investment, but government oversight dictates timelines, costs, and ultimately the speed at which a company can generate revenue. Ignoring this component is a mistake because it's not optional. It's baked into the very nature of the business. Understanding these hurdles, planning for them, and being patient are crucial for anyone looking at Oklo as an investment. Even if we look past the hype and the regulatory hurdles, there's another major factor that investors often underestimate. Investment, and that's execution risk. You can have the most innovative technology in the world, the cleanest energy solution, and the brightest minds working on it. But if the company can't actually deliver on its promises, it doesn't matter. Investment. Execution is where the rubber meets the road. And in a field like nuclear energy, execution risk is enormous. Building a functional small modular reactor isn't like opening a new store or launching an app. It's an incredibly complex engineering challenge that involves precision, safety, and coordination across multiple disciplines. There are countless moving parts, supply chains for specialized materials, teams of engineers managing highly technical processes, contractors, testing facilities, and so on. Each of these layers introduces its own potential for delays, mistakes, or cost overruns. Even a minor setback in one part of the process can cascade into months of lost time or millions of dollars in extra costs. What's tricky is that most investors don't see the behind-the-scenes challenges. They see the polished presentations, the glowing press releases, the concept models, but the reality of day-to-day execution is much messier. Problems will arise. Equipment might not meet specifications. Suppliers might fail to deliver on time. Testing could reveal unexpected safety concerns. And when you're dealing with nuclear technology, you can't just patch these issues quickly. Everything requires meticulous attention, and every delay can have serious financial implications. There's also the human factor. Even with the smartest people on your team, mistakes happen. Miscommunication, project mismanagement, or even overconfidence in the technology can create setbacks. In industries like this, experience counts, and the learning curve can be steep. Companies often underestimate the level of expertise and coordination needed to get from concept to a working revenue-generating facility. Execution risk isn't just about whether the technology works, it's about whether the company can manage every moving piece, every team, and every regulatory requirement efficiently. For investors, this means that Oklo's promise of clean, revolutionary energy comes with a very real question: can they actually build it and operate it profitably? Even a brilliant idea can fail if the company struggles to execute. Delays or mistakes in execution not only push back timelines, but can also erode investor confidence, affect stock prices, and increase the capital required to finish the project. It's a domino effect that can be easy to miss when everyone is focused on the potential upside. So when you consider Oklo as an investment, execution risk needs to be front and center. It's not just about what the company plans to do. It's about whether they can deliver on those plans reliably, efficiently, and safely. Ignoring this risk is one of the easiest ways to get caught off guard. And it's exactly what separates smart investors from those who buy into potential without thinking about the practical realities. Even if Oklo overcomes the hurdles of innovation, regulation, and execution investment, there's still one crucial factor that many investors overlook: market adoption. Having cutting-edge technology and successfully building a reactor is one thing, but getting the market to actually use it is an entirely different challenge. Energy markets, especially when it comes to nuclear power, are slow-moving and notoriously conservative. Utilities, governments, and large-scale buyers don't switch technologies overnight. Investment and the pace at which they adopt new solutions can significantly affect the timing of returns for investors. The reality is that even the best technology won't generate revenue unless people are ready to buy it. Utilities and governments have established procedures, contracts, and risk assessments that make them cautious about early adoption. They often prefer proven solutions over new technologies, regardless of how innovative or promising they are. This creates a natural lag between a company's breakthrough and the actual market uptake. Investors who focus only on the promise of the technology can underestimate this lag, leading to frustration when revenue growth doesn't match the hype. Another important aspect is competition. Even if Oklo's reactors are revolutionary, the energy sector is crowded with existing players, and the transition to new technology is rarely straightforward. There are established nuclear providers, renewable energy companies, and even alternative small modular reactor developers who may compete for the same market. Early adoption by major utilities can be slow, fragmented, and highly negotiated. This means that while the potential upside exists, it may take longer than expected for it to materialize, and early investors may need patience. We also need to consider public perception. Nuclear energy, even in a smaller and safer form, still faces public skepticism. Concerns about safety, waste, and environmental impact can influence government decisions, regulatory speed, and even utility adoption. Market adoption isn't just about technology. It's also about trust, perception, and alignment with broader public policy goals. Without strong confidence from key stakeholders, even the most efficient and innovative solution can struggle to gain traction. For investors, this hidden risk is subtle but powerful. Market adoption can delay or limit revenue, impacting stock performance and growth projections. It's not something that will necessarily make headlines, but it directly affects the timeline and magnitude of returns. Investment. While the story of Oklo is compelling and the technology is fascinating, understanding the pace of adoption and the conservatism of the energy market is critical. So before you get caught up in the excitement of revolutionary reactors and disruptive energy technology, remember that the market ultimately decides the speed of success. The technology might be perfect, the team exceptional, investment, and the execution flawless, but with timely adoption by utilities and governments, the upside you imagine could take far longer to realize than you think. Patience and perspective are essential if you want to navigate this investment wisely.